But let's also welcome on board Nischal Maheshwari and find out what he's making of the market right now. Nischal, hi, good afternoon. Good to have you on the show. I guess the question on everyone's mind is, there is definitely that FOMO feeling out there because the market so swiftly from those March lows has caught up and we're now just about 2% away from the all-time peak on the Nifty. Do you put fresh money to work right now or not?
Afternoon, Aisha. Thanks for having me. I definitely I would put fresh money basically because I strongly believe that we are headed towards a new high in the market, and I think maybe it's only a matter of time. Come Diwali, basically, you will definitely be on a new high of a market basically. So I think if you are looking to invest, I think every dip is an opportunity to invest.
Right. And of course, the question is, where do you invest in? Do you buy more of the same financials? That seems to be the go-to sector, or a fewer defense names, or is there anything new, a bottom-up story that you're looking at?
I think the play basically at the moment is interest rate cut. I think that's a big play out there in the market. And the second thing is expecting that all what the government has done and the good monsoon will all actually play out as far as consumption is concerned in the second half of the current year. So you should be looking at doing something like BFSI, autos, a bit of FMCG. So I'm saying consumption as well as banking. I think that's a play basically which should play out basically in the remaining part of the year.
Interesting that you say consumption, Nischal. Again, considering it's such a broad umbrella, what end of the curve of consumption do you think one can buy just yet?
So two parts of it. One is obviously I think the urban consumption still continues to be okay. The rural has started picking up, and that's where I would actually go out and look for a two-wheeler. I would go out and look for a certain FMCG names which might do well, basically, which are more focused onto the rural side. So I think that's where I would be looking to do consumption. But obviously the urban rich and urban rich sectors still continue to do well. So I think those are the two ends basically one should be invested into.
All right, so that's about the consumption space, but within consumption, let's talk about the auto sales data that is due tomorrow, and let's tell you what we are expecting on the auto sales front for the month gone by. So firstly, when we see the segment-wise contribution, so herein we are expecting that the two-wheelers as well as the tractor, these segments should do better versus what passenger vehicle should pan out on the number front, because this time again we are seeing that it has been quite a subdued response to the passenger vehicle sales. The companies are actually giving heavier discounts in order to push the sales, and a lot of these inquiries are now not turning into the actual sales when it comes to passenger vehicle segment, and so is the case of commercial vehicle as well, wherein a subdued sales data is what we are expecting. Let's talk about the numbers then. Firstly, from the passenger vehicle segment, all across the board, be it from Tata Motors, Maruti Suzuki as well as M&M, month-on-month decline is what we are expecting onto the sales data, and especially for M&M, the decline could be as much as 7% this time around. And that will be interesting to see that once again M&M manages to surprise us or not. But now let's put the spotlight on the two-wheeler segment. Here in TVS Motors as well as Eicher Motors, on a YOY basis, these companies can actually post a double-digit growth number, while for Bajaj Auto, nothing much is expected. But from Hero MotoCorp, we are expecting a sales data of 5.5 lakhs units, and in the two-wheeler segment, the key to watch will be the commentary, and especially the commentary related to the rare earth magnet issue, because last time the companies were very vocal about that. Now commercial vehicle segment, like we flagged off, nothing much is expected here. Let's see how the numbers pan out to be, because on month-on-month basis a very subdued performance is what we are expecting. And lastly, from the tractor division, a double-digit growth on a month-on-month basis is what we are expecting on the back of a favorable rural sentiment. Along with that, what we are getting to see is the base effect should actually kick in. That's about the auto space and the sales data that is expected. But quickly, if I can have your take, Aditya, on two of the two-wheeler counters that are expected to outperform. One of them is Eicher Motors and the other one is TVS Motors. Just on the chart check, and how is the technical setup looking like? If you can help us with your analysis.
Sure, I think TVS Motor clearly stands out. As you were also pointing out, the results could be a little better than expected, numbers could be better than they expected, and even charts are pointing the same. After a stellar rally from 2,200 odd levels, the stock ran up till 2,700, and after that, we have seen simply consolidation and no underperformance was seen when market was in pressure. And post that, we have seen good recovery or a fresh leg of rally in this counter. So I think TVS Motor stands out from the list, and I think one can expect outperformance in this counter.
In fact, we were just chatting with Vinkesh Gulati as well earlier today, talking about the overall trends, which seem to be on the positive side. And that's what we can expect when the monthly data from Motown actually comes out. In fact, let's hear out what Mr. Gulati from FARA had to say.
Trends overall are on a positive side. If I compare June YOY, two-wheeler is on a growth and automatically it has surpassed the last year June numbers already. The tractor is also growing. Passenger vehicle is a bit behind, but I'm confident today those numbers will reach or it will be a very nominal difference. I'm still confident it will be similar like what June last year was. So overall industry will be in positive as compared to June last year, whereas at the start of the month we were a bit feeling a challenge because of a lot of external factors like war, then tariffs, and then this rare earth material story going on. The sentiments around weren't positive, but I feel the marriage season actually pulled it through, and the rural market, which is now slowly taking over, and the ratio is improving as compared to urban. That is where we got tractor two-wheeler is the clear indication that they are seeing the improvement. So overall, June year on year will grow. I feel most of the categories. Passenger vehicle, it could be a bit lower, similar, I feel. The numbers are looking fine as of now. Uh, Short term, the coming 2 months are still, again, a challenging month. If I talk about July and September,
Okay, so that's the word coming in from Vinkesh Gulati. But let's move away from autos. And Kapil, I want to get your sense on the sector rotation that we've seen in the month of June. And IT and realty on a month-to-date basis have been the biggest gainers. That was in the first half of the month. And after that, we've seen both of them tank or rather dip for the last, let's say, 8 or 10 days of this month. On the charts, are you seeing any scope of revival for Nifty, IT and realty?
Nifty, so of course, the Nifty IT and reality in the previous months they have did quite well, and in the current context or in a recently brief history, we are seeing there is some sorts of a price-wise correction is going in the reality, and a time-wise correction is going in the Nifty IT sector. But out of these two comparisons, I can bank on the Nifty IT sector. It is going through the time-wise correction, but the structure has improved, and we have some sorts of a cyclicality analysis of the Nifty IT, and since 2004 we have observed a one particular pattern. Okay, whenever this particular Nifty IT index falls, it falls for 35 to 36% from the top, and when it moves up, normally the upside phase is for the 2 years. So we are seeing that Nifty IT is corrected 35%, and then it has gone into some sorts of a time-wise corrections. Yes, there can be a little bit more pain from the price-wise and time-wise perspective, but whatever the declining momentum in specifically the IT sector that we see, we look it as a buy opportunity. And if the view isn't quite of the horizon is a positional one can hold the position for a quite good time. And within that, the second tier stocks like emphasis, persistence, we are preferring as a bet.
Interesting. Nischal, soon we're going to be headed in for earnings. Where is it that you see some meaningful surprises coming in, and where do you think disappointments would persist?
So I think banking, you are going to see a bit of disappointment basically because the credit growth is not as strong as one would have expected. The measures which the RBI has done basically, I think, is yet to see transmission. So I think you might see some issues basically because as of yet you are seeing around 9-10% kind of a credit growth. So I think that would be one. IT would be obviously be a bit disappointing. So I think surprises are going to be far and few. And there are going to be more disappointments basically, because overall we are expecting a subdued earnings quarter, current this quarter and the next. So I think more disappointment than surprises. Maybe cement is one basically which I see. You might see surprises because last quarter also you saw volume growth which surprised everybody. I think this time it will be backed by prices also.
Right, but with this picks by both of our experts when it comes to the technical picks, then Kapil, you go first. Tell us which is the stock that you are tracking at this point in time.
Right. So today the pharma sectors, we are seeing some sort of traction, and specifically the mid cap and small cap we are seeing the traction. So out of that space, I am looking at the Jubilant Pharma trading at a 1,210 or so. Stop loss is a 1,160 and upside potential is at a 1,280 level. So that is the worst thing. And second stock is a Trend, which is also showing us some sorts of a bullish continuation sign. So in the trend, we are positive with a stop loss of 5,900, and on the higher side, 6,500 can be the target.
All right, so those are the top picks coming in from Kapil. But Aditya, what about you? Which is the stock that is making to your list?
Yeah, so one stock from finance category, Aditya Birla Capital, despite the weakness in finance space and overall general market, this stock is showing clear-cut outperformance, and that is also supported by good volumes. It has also engulfed previous day down move, so that's clear indication of strength. So this one is a buy at 277. Stop loss over here is 265 and target is 290. This is the first stock, and the second one is Ipca Labs. Today we are seeing pharma sector emerge from the lows, and we are seeing good relative strength, good recovery. Probably sector rotation or money flow is happening in pharma sector, and this stock is leading the rally. So this one is a buy at 1383. Stop loss over here is 1330 and target is 1440.
And Ipca Labs looking good to Aditya. But in a short while from now, all eyes are going to be on a very important macroeconomic indicator that we're tracking closely, and that's India's IIP data, which is the industrial production growth. Now, this for May is expected to slow to around 2%, with estimates ranging from 1.5% to 2.5%. The dip comes amid a sharp core sector slowdown to a 9-month low, dragged by a plunge in electricity output. However, strong momentum in cement and steel is likely to cushion the fall. Varun is joining us with what we can expect to see from the IIP data in a short while from now. Varun.
The IIP numbers are expected to come at 9 months low, and the average is actually 2.4%, that is Nirmal Bank's average, and also ICRA is expecting the IIP number to come at in the range of 1.5 to 2.5%. Now, if you look, the overall IIP would be supported by manufacturing, although the low IIP numbers, that is a 9-month low, actually reflects the marginal slowdown in the core sector growth and also slightly higher base. Now, the core sector number that has come at around 0.7%, which was at 9 months low, and the slowdown was basically because of the electricity production, which was down around 5.8% on a YOY basis. Now, the electricity production was basically down because of excess rain that was there in the later half of 2002, May 2025, and because of this, the electricity generation in that month were actually low, which actually pulled down the overall growth in the core output. Also, if you look at the coal production numbers, they were slowed to around 2.5% on a YOY basis in the month of May versus 3.5% that was there in the month of April 2025. No doubt the construction related sector, they did well in the month of May, but if you look at the overall coal sector growth, that was at 9 months low, and that's the reason you can see the overall IIP numbers coming at a 9-month low of around 2.4%, that is Nirmal Bank's estimate, and also ICRA actually has a bigger range of 1.5 to 2.5%. So keep an eye on this.
Well, PSBs definitely is where you're seeing some renewed action. In fact, the entire PSU pack has done very well even in the week gone by. So have PSBs. And selectively, you are seeing gains there today too. Look at a PNB, for instance. That's scaling higher by almost about 4%. There's BOB, which is higher by 3%. And then, of course, the large cap SBI, which continues to sit on a 2% gain. Nischal, any opportunities within PSBs after the recent run-up too?
I think the larger one, basically, SBI looks quite well poised. It has underperformed quite a bit, basically. If you look at it, it's sort of a flattish, basically, in the last 6 to 9 months. So I think that could be a good breakout, basically. I'm waiting for it to cross 825 and that's a place basically one can look at.
All right, so that's about PSB. Yes, of course, today they are doing very well. Like Snehi has been flagging off, some of the smaller names are doing well, and from the large cap space, it's SBI leading all the way and being the top gainer, and the second top gainer rather when it comes to Nifty 50. But other than that, within the pharma space, we also have Laurus Lab that is doing very well, and off late we have seen the momentum picking up when it comes to this particular stock. Aditya, just wanted to have a quick chart check by you. What exactly are you spotting with respect to Laurus Lab? Aditya, I guess you have to unmute yourself.
Sure. I think, am I audible now?
Yes, you are.
Yeah, so I think Laurus Lab has seen multi-week and multi-month breakout. Last high was seen in 2021 when Laurus Lab achieved 725 odd levels. So this breakout is coming after almost 4 years. So it has a lot of meaning to it, and a lot of volume back, price action back move is happening over here. So this rally may continue. It may not fizzle out quickly, and there could be more gains over here. So one should watch out until and unless it sustains above 700 odd levels, as it's in FNO also. A lot of call writers may be caught in 700 strike. So I think it has good strength above 700 odd levels, and upside levels one can watch out for are 770 to 850, and one can place stop loss at 680.
Okay, so that's the take on Laurus Labs. Kapil, coming to you, give us a sense on what are you seeing in some of these. Okay, so we'll move on from that, and in the interim, let's just talk about Karnataka Bank. This stock has been in focus ever since the get-go today. Remember, this stock was stumbling on the back of big leadership churn, wherein the MD and CEO had quit, followed by the company's ED as well. Meanwhile, we're now understanding that Raghavendra Bhatt has stepped in as COO, and the exits come amid board management friction after auditors flagged 1.5 crore in expenses without board nod. Ankur is joining us to tell us about everything that's been happening and the latest update that we have from the bank. Ankur.
Yes, in a surprising turn of events, top leadership of Karnataka Bank has resigned. MD and CEO Harsh Sharma resigned effective from July 15, and similarly Executive Director Shekhar Rao has also tendered resignation effective July 31. The bank has already made appointment of new Chief Operating Officer, and Raghavendra Srinivas Bhatt, who is a new Chief Operating Officer, his joining will be effective from 2nd of July. But for all these appointments, there will be regulatory approval which will be initiated, and bank has already formed a committee to look for a new MD and CEO. But what has been the matter so far? There has been some differences as per sources between board as well as management. Remember, auditors had flagged expense of 1.53 crore made without any board approval. However, the other side, the MD and CEO had earlier made a statement that this is a too negligible amount to look after. But we understand that expense incurred in consultancy and capital outlay, and it was recoverable as per the management. However, auditor issued emphasis of matter in FY25 accounts. But now, in the latest statement which has been released by the bank, Karnataka Bank clearly says that the matter is resolved amicably. So therefore, no such kind of differences remain as per the claim which has been made by the bank. But for now, the top leadership has quit Karnataka Bank.
Okay, that's what we're picking up right now on Karnataka Bank and the board versus management case right now. But Aditya, what banks are looking strongest to you right now? While there is pressure on Axis, one has clearly seen the shift towards PSBs, SBI, and then underperformers like IndusInd Bank, which are holding out.
Well, I think the leadership is clearly shifting from private banks to public sector bank. And today, all the private banks have underperformed, like Axis Bank, ICICI Bank, HDFC Bank. But relatively, very good move on the public sector banks. So the top pick for me in banking space would be Punjab National Bank, currently quoting at 0.55. I think a move of 5 to 10% over here shouldn't be ruled out. So this is a buy at CMP, and stop loss can be placed at 105, and targets which I'm watching out for are 115 to 120.
All right, so that's about the public sector bank, and PNB is looking good to Aditya. But Nischal, the other thing that is looking good right now is the whole lot of chemical space, and especially specialty chemical. Anything that is looking good to you right now within this sector?
Yes, definitely. I think two spaces. One is the agrochemical side of the business, basically. I think given that there is a good monsoon, so domestically the demand has been pretty strong. So the agrochemical side of the business looks interesting as far as the chemical sector is concerned. On the specialty side, I think some of these companies, especially which are fluoride based, they are doing pretty well. So something like a Naveen Fluorine, SRF, I'm saying that is once again basically the space to be in. So I think these are the two spaces basically which look interesting to us.